Hey traders, welcome back to uGenesys. In today's video, we'll explore a powerful consolidation pattern known as the broadening formation. This pattern serves as a valuable tool in predicting potential reversals in the direction of the current trend. Let's dive in. The broadening formation is a unique consolidation pattern that indicates a near-term reversal in price action when found within an uptrend. Unlike other patterns that suggest trend continuation, the broadening formation signals a potential shift in the market sentiment. This pattern emerges when the price fluctuates within a series of higher highs and lower lows, which progressively widen over time. Typically, broadening formations are observed in topping formations where they stem from unrealistic expectations of bullish investors. What sets the broadening formation apart from other consolidation patterns is its increasing range and higher volatility as time passes. As the share price rises, volume levels also tend to increase. However, these rallies are often short-lived and subsequent declines can decimate former support levels, leading to an eventual collapse. It's crucial to note that the broadening formation's widening ranges and higher volatility make it a distinctive pattern. Traders must be cautious when encountering this formation, as it signifies a potential shift in market dynamics and a likelihood of a reversal in the near term. Additionally, keep a close eye on volume levels during the broadening formation. While rising volume typically indicates a bullish position, rallies within this pattern tend to be short-lived. This further strengthens the case for an eventual reversal. And that concludes our exploration of the broadening formation, a powerful consolidation pattern that can provide valuable insights into potential trend reversals. Remember to like this video and subscribe to our channel for more valuable insights.